All right, mates, welcome back. Crypto Leverage Trading Group. Everybody's doing well. Today, we're talking some altcoins. I just did a video for Bex Plus users. Anyone trading on Bex Plus should check that out. But you can also use Bex Plus for any number of things, especially I like the charting format on that. But we are currently on TradingView per usual. You can see the bars that were listed from the previous video. You can see how we broke down below that level of initial support. And then now we've crossed. We had a cross here, so there was an Ethereum trade here to the upside. I think that trade was 28% trade profit. Then we crossed again, broke down. Again, short traders profited 30% to 35% on the short trade. And now we're back where we are looking at the next trade. So what is the Ethereum? Okay, we are sitting right now. It's about 5 p.m. Wednesday. So we're trying to get our pre-set up for the weekend, right? That's what we're looking at. 2871 is the 7-day. Okay. We're currently right at around 2868. Okay. So Ethereum has to break. Remember, first leg is the bottom. Whatever the lower exponential moving average or daily moving average is on your chart. Okay. Between the 7 and 21. In this case, it's the 7-day, okay, because it's been trading in that range lower the past week, right? So its average is lower, okay? So it needs to break that 7-day first. Once it breaks above and you get a candle close above that level, 2871, we're going to say 2871, okay? Then you're going to target 2903, which is this level right there, okay? That's how you play within the gap. So for me, cheat sheet, okay, I like wide gaps, but I also like narrow ones, okay? And here's why. The wide gap, the wider the gap is between the 7 and 21 day, okay, the more room gap there is to fill for the bulls to come in before the next test. That next test would be the 21-day of an average. So if the bulls reverse the market right now in Ethereum and Bitcoin, Bitcoin's going to break through its 7-day or 21-day, whichever is lower, and then it's going to test the next one, okay? But it's going to fill the gap of space. So if the gap of space for Ethereum in this case is about 25 to 30 basis points, that's a big gap for Ethereum. For Bitcoin, it could be anywhere from like 500 to 1,500 basis points. But your return off the trade isn't going to be as high as Bitcoin because Bitcoin's valuation is $39,000. Ethereum is $2,800. So all things being equal, your P&L and your return on the same investment at the same time, same amount of money, same leverage, it's going to return you higher in Ethereum than Bitcoin. Okay? That's how you can use Bitcoin, what's happening with Bitcoin, never trading in Bitcoin, but make money off of Bitcoin. Okay? Because you're using Bitcoin as the oracle. Okay? It's telling you what's going to happen with the market in the next 24 hours. And that's how you play it. And you play it all the way down. How do you play it, mates? You look at those altcoins that are highly correlated to Bitcoin. Simple as that. And what does highly correlated to Bitcoin mean? It means it moves in concert with Bitcoin up or down. What Bitcoin does, 97% of the time, the altcoin does. So if Bitcoin goes down, and if it's 0.97, 97% of the time, that altcoin is going to go down with Bitcoin. Now, there are a few that are not as correlated. Cardano is one of them. Cardano is not highly correlated to Bitcoin. It actually does its own thing a lot, okay? But Ethereum is still correlated with Bitcoin a lot. But here's the thing. Once you diagnose Bitcoin and then you diagnose Ethereum like you have here, when Ethereum breaks its moving averages, Ethereum is also in which a lot of the DeFi tokens are correlated to. So then they too are going to rise higher. They are valued at much lower than Ethereum, so your rate of return is much higher in those DeFi than necessarily Ethereum. And that's really all there is to it.